Got two high yielding dividend stocks that I believe have a lot of upside potential. One of these I do own and I plan on owning it for a long time. The other one I do not currently own, and it's not because I think it's a bad stock. If I thought it was a bad stock, I would not be making a video about it. I simply just don't own it because I don't think it fits into my portfolio. But let's go ahead and get straight into what these two stocks are. Also, before we get into that, make sure to check out M1 Finance using the link in the description or the pinned comment down below. Depositing $50 can give you $50 free back. It's free money. But let's go ahead and talk about stock number one on the list, and that's going to actually be ExxonMobil, ticker XOM. This stock it's currently 9:55 in the morning Eastern time, so the market's been open for only about 25-30 minutes, and the stock is down 2.27%. And if you watch this video in time, you might be able to buy the dip. The stock over the past year alone is up 50.63%, and year to date, it's up 23%. The oil market has been doing pretty well for these stocks recently, and ExxonMobil is trading at a good value of 14.53 PE ratio, and they have a dividend yield of 4.5%. Now, you might remember back in COVID, whenever the stock fell all the way down at these levels, the yield was like 8%, and that's really good. But as the stock price rises, and they're not necessarily not increasing their dividends, but they haven't increased their dividends to an insane extreme. Like if we go ahead and look at their dividend history, we'll see, sorry, it's just taking a second to load right here. The dividend history on this stock is really solid. They pay their dividends on a quarterly basis, and their consistency grade is about an A minus. Now they have consecutive years of 40 years of payments, 87 cents roughly, and then they just increased to 88 cents per dividend payment. But looking on their dividend scorecard as a whole, it's pretty solid. It says they have a payout ratio of about 65%, a 5-year growth rate on their dividend 3.13%, and a forward yield of 4.39%. They pay these dividends. If you want to get in, we just missed the ex-dividend date, but that's okay. Buy now, and if you continue to hold, you might be able to get qualified dividends. Let's go ahead and talk about more on ExxonMobil. They have a nice PE of 14.88 and a yield of 4.39%. Compared to Chevron, they have a higher yield and a lower PE, which makes it, I'm not saying it automatically makes it a better stock, but that is some pretty big things to look at. Now, looking at ExxonMobil, they have a forward PE of 12.38, which is really good. Nice margins of 8 and 11%, 83% quarterly revenue growth, and just looking on some big things, some big factors, this company is really solid. We'll look into their financials later, but they're a strong cash flowing company. So for those who don't know exactly what ExxonMobil does, what they do is they explore for and produce crude oil and natural gas all around the world. They operate through upstream, downstream, and chemical segments. They're also involved in the manufacture, trade, transport, and sale of crude and natural gas, a bunch of oils. So pretty much they're an oil and energy company, simply put, based in Irving, Texas. Let's go ahead and talk about, they have a ton of global brands. ExxonMobil, their chemical brands in USA and China. Exxon, the gas stations, Mobil, like Mobil 1 if you want to get oil in your car, things like that, in a variety of countries, okay? The list goes on and on. They have Esso. They can get these Esso branded fuels in a ton of different countries as well, which is really good. XTO Energy. So they are just a massive conglomerate with huge upside potential. Now, looking at their last quarterly results, this is really good. They generated $48 billion of cash flow from just their operating activities, which is the highest level since 2012. And they reduced their cost by $1.9 billion, increasing their savings, paid down $20 billion in debt. By 2025, they expect to achieve emission reduction plans. That's 4 years ahead of schedule. They aim to achieve net zero scope 1 and 2 greenhouse gas emissions by 2050. So they're having long-term expectations, meaning this is a great long-term buy and hold. Consecutive annual dividend growth for 39 years, $23 billion in 2021 earnings. A lot of really good things that we're seeing in this company. Now the financials. Financials have been all over the place, but right now they're at all-time highs, which is really a good thing to see. Net income doing really well as well. It went high, low, really low, but now it's back to all-time highs. Looking at their balance sheet, just to give it a quick look, their assets and liabilities is a really good rate, giving equity in the company. Now cash flow. Let's talk about the cash flow in this company. It's kind of hard to see on this because, well, trailing 12 months gives no data. However, as we saw from their Q4 results, $48 billion of cash flow from operating activities in a quarter. That's like insane. That's really good. 2021 cash flow, the entire year. This is really good numbers, and their cash flow in this economy, I think in the high interest rate, high cash flow companies are going to perform the best. Now, one thing that struck me was sales and earnings are expected to decrease over the next year just from analysts. However, they're expecting really good numbers, and they're making really good numbers right now, so it's not the biggest concern. Morningstar is giving them a fair value of roughly $76, so trading a little bit above their fairly valued range. Now, tip ranks price targets are about 7% upside, 9 buys and 9 holds, and institutions are buying pretty heavily right now, $7 billion more being bought than being sold. But let's go ahead and talk about stock number 2 on this list, and this is the one that I own, and that is Pine, Alpine Income Property Trust, Inc. They are a REIT with a 5.65% dividend yield. This PE ratio is a little bit higher than it actually is. We'll go ahead and look into that, but the ticker is Pine, P-I-N-E. Over the past 5 days, the stock is up 0.4%. On the daily, it's up 0.78%. Year to date, it's down 6%. And over the past year, it's up 2.11%. Let's go ahead and talk about their dividend. So their dividend grades are okay. The dividend safety isn't the best. Now you might be looking at this and be like, Hunter, this is a payout ratio of 1,100%, almost 1,200%. Why would I buy this company? And this is actually messed up. I'm going to show you the real payout ratio, and it's very sustainable. So let's go ahead and talk straight into it. So Pine right now has earnings per share about 89 cents in the trailing 12 months with a dividend forward of about $1.01, a PE of 21.49. Looking at companies like Realty Income, Pine has a better earnings per share to dividend, and it's a little bit different when it comes to REITs. But what I'm saying is Pine has almost better financials than Realty Income. They have a lower PE, a higher yield, and a better earnings per share to dividend, pretty much a payout ratio. But what really matters is the flow from operations. They have good margins, 33%, 18%. Revenue growth earned up 76% year over year. Earnings year over year is 4,300%. So I don't think it's necessarily going to stay like that. But keep that in mind. Short percent of float is really small, so you know that people aren't betting against this REIT. They have good cash flow. If we go ahead and talk about who this company is, they're a publicly traded REIT that acquires, owns, and operates a portfolio of high-quality, single-tenant, net leased commercial income properties. Now, let me go back and mention, this is not a massive company. They're only worth $225.6 million US dollars. Now, I say only. But compared to a lot of REITs, this is a smaller number. But looking at their portfolio, they own property in just income-producing assets in a multitude of states right now, especially with Florida, Texas, New York, North Carolina, Oklahoma, Arizona. You see they're owning a lot of portfolios, even up here in Maine. But let's go ahead and show they own Wells Fargo, Lowe's, Walmart, Century Theaters, ton of different places, Best Buy, Big Lots, Tractor Supply Co., LA Fitness. You see they own a ton of pretty good quality grade companies who can pay them what they owe. Now let's go ahead, and if we go ahead and look at just over the Q4 of 2021, net income per diluted share was 64 cents and 89 cents for the quarter and year. So for the quarter of 64 cents, we're about to see their payout ratio look a lot better. Flow from operations was 42 cents and $1.58 for the year. So they're definitely, for the year, their adjusted flow from operations is even a cent higher. So that's a really good thing to see. This is definitely a sustainable payout ratio, and it's not really 1,000%, which is like insane. Now, if we go ahead and just look onto some more things, revenues are looking really good, growing 7 million, 8 million, 7 million year over year. Go ahead and look at this company's balance sheet. Very solid. A lot of equity, more assets than liabilities. Looking at the company's cash flow right here, good stuff. Year over year, growing and growing and growing. Really like to see that. Investing heavy in the company, which is a good thing to see. So let's go ahead and just look into some more things. The company's earnings, and is earnings expected to decrease, which kind of shocked me, but I don't really expect that, as they had 89 cents this year for earnings, and they beat it by a lot on these estimates, so I'm not really too necessarily scared by that, if you want to say that, or nervous, concerned. But sales are expected to grow by 38%, which is a massive number. Morningstar is giving this stock a fair value of $21.51, giving it a 10% discount. So right now might be a good time to buy the stock. especially with how high the yield is. Get a good yield on cost as well. 63 million bought compared to 25 million sold. So these numbers are really good in my personal opinion. Now, that is going to wrap it up for this video. So if you enjoyed it, make sure to subscribe to the channel, turn on post notifications so you miss out on any future videos. Thank you for making it to the end. Check out M1 Finance if you haven't already. It's a great platform. It's what I use for like 3 different portfolios. If you go check it out using the link in the description or the pinned comment, it'll say M1 Finance. You click that link, you deposit $50 into that account, you'll get another $50. So $50 turns into $100 automatically. It's a great ROI, 100%. You can take that money and invest it, or you can pull it out and do whatever you want. Go buy Chick-fil-A. But again, thank you for making it to the end of this video, and I will see you at the next one.